Hi, everyone. Let's have a great week. Hope everyone had a nice long weekend. I know that Europe is still celebrating Easter. Hugo, Jays, Mike, how are you? You guys doing okay? So, get the charts up here. Everyone see the charts? Good morning, Ryan, if you're back.
Good morning. We can see them. Hey, man.
Hi, hey, Stel. How you doing today, buddy?
Very good, bro. Very good. And you?
Aren't you guys still celebrating Easter in Europe for another day or two?
It is celebrated. Yes, I'm not a religious man, but it is celebrated. So things are very slow, and most markets are closed.
Well, you're more of a god that should be worshipped than a religious man. So, I have one comment on Euro after Thursday. I want to know what you think, and just from a trading perspective. So, I know all of us thought that we'd get a pretty good breakdown under the low at 108.06, and so a lot of people had their stops there, and for a while they said, wow, that was a good stop. I'm glad I'm out of it, but we're a couple pips above where they got stopped out, and now they're probably asking themselves, was it good that I got stopped out? You ever think in those terms, where people get shaken out and then it's back over where they were liquidated, or under if they were short where they were liquidated, and really was this just a stop hunt here on the worst news that you could get out of the ECB? And then when you look at the daily, even though we made a new low, you have some pretty glaring divergence. Isn't this, and I don't even know what DSI is, probably -3. So what do you think, man?
Well, the thing is that you said that you say this all the time. You have to be very careful where you put your stops. If you put your stops where most people are going to put their stops, where it kind of makes sense to put them, then they're going to get hit every time, right? These stop runs are now such a common phenomenon that you have to give them a little bit more breathing space, even that if that means that you're going to take a smaller size. So I think that did definitely look like a stop run, but then again,
you still have to do something right besides just not go lower. Yeah.
So it's a tough question, but it's with machines dominating, and algos dominating, you have to be careful when placing stops, and because as I said before, if they're obvious, and usually the level is pretty obvious, like we've been talking about 108 in euro dollar for ages. Right. So you put your stop a little bit below, well, it's going to get hit. It's it's as simple as that.
Yeah, I did it with 100 pip stop, so I didn't get taken out. But one of the things I thought might happen, and we'll see if it means anything. EG could still go to new lows, but the fact is, so far, it's a higher low at 78.6 back. So normally, every time the euro was making a new low, we'd get new lows in euro pound too. I think this is the first time that it has happened in a while. So
interesting.
Yeah, and also we did make a new high in yields overnight. After pulling back from that 283, we made new highs, but here's something else that isn't confirming. And I know it's been a real unsuccessful thing to try and top pick the yen, but yen kind of the same message of really not confirming momentum up here. So, nothing goes straight up or straight down, and I think we could get a correction in yields and a correction in the yen, maybe back to 25, and then if it really gets going, 21. And that's nothing, considering the run that we've had for it to come back to these levels, would just be a correction. What do you think?
Well, I got to jump in there, and good morning, you guys.
Good morning, buddy.
Hey, how's it going? And happy Easter, by the way, Dale, Stelios. I hope you guys had a wonderful holiday. Looks like our other friends like Ryan and K-Man are still enjoying their holiday. So that's good. You know, I hope so, because I know in Europe that's you know, a lot of people celebrating. Stelios, why are you even here, by the way?
Well,
I mean,
why?
I know you're not a religious man, but isn't the rest of your country taking the day off?
It's okay. I'm at home. We're gonna be leaving with the kids in about 2 hours, so it's okay. I'm here. I'm gonna be.
It's nice to have you here.
Yeah,
It was a pleasant surprise. Let me just put it that way. It was a pleasant surprise. So, I guess when you were saying, you know, the yen, and let me do you mind if I take over a little bit?
No, like
okay.
I never do.
So you're talking about the yen, Dale. I guess the question I have to ask you, or ask not you specifically, is ask in general, is why does it have to pull back? Now, I know
it doesn't.
It doesn't, right? And that's the thing that one of the big I want to say my big takeaways from trading with Gelos, that group, and doing proprietary trading with them, was really them questioning the whys, like why, you know, because our natural, as a trader, our natural tendency, it's probably more in our human nature than anything, is to accept some sort of pullback, or some sort of pullback, retracement. But I guess the question that I have to ask is, why would it, especially that we broke out? I mean, we had this massive breakout, and the weekend it broke out. I mean, we closed above 126, and let's just understand that those are levels that we haven't seen in 20 years, right? So they're above this whole horizontal resistance. We're actually making higher highs. And then, you ask yourself, well, why should it pull back this week? And is there anything right now stopping the yen? I mean, do you see anything, Stelios?
Yeah.
Or Dale?
Go ahead, Joe. Oh, I just thought that there might be a peak in yields. And that's the same argument. You could say why.
Yeah. No, I agree. I agree. And that's something that I did point out actually on the week ahead video, is, how about if yields peak? But I'm just asking, I guess I'm just asking for today. Like, I'm not sure I'm willing to step in front of the dollar yen right now. It is. Yeah. And Mike says, yeah, maybe some more job boning. Well, yeah, that maybe some job boning, but I think it's been pretty clear, if we don't get anything from the from like the Ministry of Finance, then it's not really going to be relevant, right?
Yeah.
I mean, yeah. I sit here. I would hate to be, and I have no yen exposure. I would hate to be buying yen right now on hopes that some job boning is going to turn it. You know what I mean?
The question is, what's going to be the driver for it to turn? It's the same as people saying, "Oh, we're peaking yields." Like, Dale, you said we may be peaking yields. Yes, we may be, but why? I have a friend, a very smart guy, and he's been short bonds for a while, doing very well. And he's like, a couple of weeks ago, I'm gonna take some profits and close because I think we're reaching the peak in yields. Well, why? And I was saying, I don't think so. And yes, you're going to have a daily maybe setback, or a correction, but in the big picture is, what's going to stop this? At least not yet. So
I totally agree with you, Stelio. Good morning, everybody.
Steve, what are you doing here? Didn't even expect you here either.
You see, you're not getting rid of us so easily.
Yeah, I was like, man, you Greeks are popping up on Easter Monday. It's great. It's
your Easter.
What's that?
Your Easter.
I know, our Easter. When is Greek Easter? Is it in a week?
Next Sunday.
Next week.
Yeah, okay, that's what I thought.
Next Sunday, mate.
Now that'll be an excuse for you guys to take off. Hell, I might even take off too. Don't forget, I am Greek Orthodox.
That is very, very true, and I totally expect to see you in church, mate.
That I don't know if I'm willing to sit for 2 hours in church right now. But anyway, Steve, what? How do you feel about yields? And
I couldn't agree more with Stelios. Whoever wants to talk about yield speaking, I can totally respect it from a short-term technical perspective. All the sentiment, the extreme positioning that we're getting at some point, blah, 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 blah. All that makes sense. And yes, almost nothing moves in a straight line, right? That is very, very, very true. But from a fundamental perspective, there is zero reason for anybody to believe that yields are anywhere near peaking. I can actually make a very, very strong case that yields are much closer to the bottom still than to peaking, right? But this comment, as I said before, is not a short-term comment, right? I wouldn't be at all surprised if short-term we see a pullback based on perhaps some risk off that is going to get some people in the usual flight to safety, get the usual correlations working with bonds getting bid because people want to find a short-term solution to park their money without risks of getting chopped up in volatile equity markets when that happens, so on and so forth. But looking at the bigger picture, we're nowhere near peaking. Nowhere near. Don't forget, inflation is now flying north of 8%, and in a trajectory that might even get us to double digits very, very soon, right? Why would yields peak here? And temporarily speaking, most central banks are out of the game of buying bonds. So at the same time, fundamentally, you have very high inflation, which requires high yields, and the previous huge bidding from central banks has either disappeared or is about to disappear, and in some cases, like the US, supposedly around the corner, we also have quantitative tightening. So instead of being a buyer, a net buyer, the Fed is going to be not exactly a seller, but by letting some of these mature, it means that since they won't even be rolling them over, it means that somebody else needs to pick up that slack, right?
Yeah, and
Yep.
I think you're right, and so we've just got to be on the lookout to see how the if yields indeed peak here, or if we do see a little bit of a pullback. Hey, I gotta point something out really quick. I hate to shift gears, but this week we actually have some New Zealand data out today, or New Zealand data out this week, because we have inflationary data. I think CPI is coming out of New Zealand. I want to point this out, and let's talk about inflation and how these commodity currencies are reacting. So I think this is like a kind of one of those questions that I ask myself. I don't personally. I think that inflation has not really peaked here, but you're getting some banks like obviously JP Morgan, Goldman Sachs that think that we're peak inflation. And you're starting to see these commodity currencies like the Kiwi, come under pressure, the Aussies coming under pressure. And, I think these mimic the moves that we've been seeing in inflationary pressures as well. Not even as much in risk appetite, more about inflationary pressure. So right now you're seeing like the Aussie come down to the 618 retracement. You got the Kiwi is approaching the 618 retracement as well. And you got inflation data that's coming out, this week. I think it's Thursday morning out of New Zealand. What do you guys think about these commodity currencies? They are not really acting too well here. Any thoughts, any opinions?
That's a good question. Definitely not.
China.
Well, and let's not forget Chinese data came in over the weekend, and not horrible. I think the retail sales missed a little bit, but their GDP numbers came in better than expected.
Yeah.
Industrial
That was before the lockdown, though. So a lot of people are thinking the lockdown is going to shave quite a bit off their GDP. And
Dale, that's a correct comment, but even completely disregarding that, I honestly don't know who really believes Chinese data. I mean,
Oh yeah.
It's I mean, for me, China was and remains like a huge
Opaque.
black box, right? Like a huge black box.
Yeah.
And as you said, with all these brutal lockdowns, etc., imagine. Of course, do I expect to see something extreme in their GDP reading because of that? No, because they massage the numbers, right?
Yeah.
Yeah.
But you could see it at the ports. I think one of their biggest ports is in Shenzhen. And anyway, so I think that's the Aussie. And take a look at copper. Hasn't been performing like the precious metals, and that's China, I think, too. So that's my answer.
All right.
Yeah, and commodity currencies do follow risk as well, right? And risk is not doing well in the past few sessions, down a little bit today again.
Yeah, and okay. So then let me throw another monkey wrench in your thought process here. Look at these emerging market currencies. They still look really good. I mean, let's take the EURMXN. This is a good example. This currency, I actually tried buying this a couple of times near the 618 retracement near when we were at the wedge bottom. But then as we took this last turn back in March, it did look like we were going to break down, and we broke down in an epic fashion in this particular pair. That was due to the Ukraine, Russia situation. But, but look at the Mexican peso just in general, and I'm going to leave it just right here. You can see the Mexican peso is actually really strong near some major support with the dollar max. I mean, I'm wondering, are we in for, some near term, emerging market strength here? What if equity markets stabilize? And that's another question that we can talk about here in a second. But
a dollar peak would help them out.
That would a dollar peak would. And I mean the euro is just kind of consolidating around the 108. But I don't know. I look at these, and all I know is just looking at the Mexican peso. If this thing breaks 1950, I mean, it's going to break down in a massive fashion. I mean, it's going to be epic, and I want to make sure I've got a piece of it before it breaks. You know what I mean? It's one of those that I want to be long Mexican pesos before this move happens, before we crack this blue line right here. If it feels like if I get in that mode that I think it's going to break down,
I think technically it looks very, very likely, if you ask me.
Yeah, I think so too. I mean, the lack of ability for this to rally is amazing in its current environment. And same with the US dollar, South African rand. And by the way, I was playing these on the long side last week, just so you all know, or was it last week or a week and a half ago? Anyway, I bought the dollar rand somewhere around here, like somewhere around this 1450 level. I sold it last week. Not too far from where we're at. I didn't make much. And after carrying it for a couple of days, I didn't make much. But I mean, I played it on the long side here, and I played the dollar max on the long side, down here as well, as we were probing this 1970 level. But I expected more. Like, I expected more of a reaction. And, I got out because of the holiday, and, I just didn't want to, hold these positions throughout the long weekend or whatever it was. I closed them, I think, Thursday last week, something like that. Yeah, before Good Friday. Anyway, the fact of the matter is they are trading heavy, and I think it's something that I want to make sure that we're very, very all aware of, because hell, I'll be really surprised. I'm going to be really surprised if they just start, selling off, or we start seeing a massive dollar rally out of nowhere. The dollar just hasn't responded well. And Dale, I think you nailed that. You nailed it there. If the dollar starts to roll over, especially after that $100 probe, we start to see the dollar roll over a bit. These things may really come under pressure. So let's talk about something else.
Let's talk about the things that are moving today.
Yeah. How about
cryptos and metals? Yeah.
Yeah. So what's going on with metals here?
You tell me. There.
I mean, look at silver's breaking that 618 retracement.
Yeah,
that's some nice resistance that we just cracked. Gold, I thought we're going to 2005, which will be the 618, but hell, we might surpass that. I mean, I was expecting this move, but I you know, whoops, I didn't mean to do that. With silver doing what it's doing, you know, why can't gold participate?
Yep. And if
you guys have anything different to say about gold other than you're bullish? I mean, look at the weekly. I'm looking for some new content here.
Look at the weekly chart of gold. It's a massive cup and handle. I mean, absolutely massive cup and handle. And when we do take, there you go. When we do take out those highs, it's game over.
Let me do it this way.
Game over, man.
Everybody can.
Game over, man.
Alien 2.
Palladium has not kept up with silver and gold. Yeah.
Yeah, I heard there's some supply shortage talk in silver. I don't know if it's regarding futures contracts delivery. I think the next one would be May silver would be the next big futures contract. So I've heard some. Well, we've heard this before, right?
We have heard it month in, month out. But from what I've been reading, the available for delivery on COMEX in silver is now, I think, all-time lows or something like that. So it's
yeah.
You know, like you said, though, we've been hearing this for years and years, and oh yeah, the supply shortage. Yes, there is. You look at premiums on physical coins. You know, the spot is $26 and the coin is, you know, 38. So all that happens is this premium just keeps increasing. But at some point, people are going to realize that the price of this spot or of futures, they are futures for delivering something. At some point, somebody's going to say, the premium, the difference is just too much. I want it. Bring it to me. Yeah,
bring it.
So,
do you guys? I'm going to ask anybody at you know, while you guys are at home and you're listening in. You know, does everybody know how to measure a cup and handle pattern? You take this. You take the bottom of the cup. Whoops, hold on. Let me grab the brush here. So you take the bottom of the cup. You measure to the top of the cup. And then you take this measurement and you take it from the bottom of the handle. So that takes us to, let's just say, roughly around 2,600. So
a lot of people talking those levels for a while.
I mean, that's not, I don't think that's unrealistic. You know, you can take this low to this high, 161% extensions, 2,500 roughly. So somewhere in this neighborhood would be a logical target, 24 to 2,600, you know, somewhere up there. So yeah, I mean, that's you know, what you would be looking for technically, you know, for anybody that, you know, studies basic technical analysis that's been written for 100 years. That's what the textbook would tell you. So anyway, yeah, I mean, big cup and handle there. And so how about, you know, Stellar, since you just, you know, talked a little bit about gold, how about silver? Any new developments there in the silver breakout? I mean, come on, I own silver. You know, I've owned it like you since the teens.
Yep.
And I'm waiting for that move to back to 50. I mean, can we ever see 50 again?
Oh, you'll see 50.
Yeah, I think so
you'll
too.
See 50.
The question is, you know, we're going to have some pullbacks. I think then the next big level is obviously the previous highs at 26.93, if I'm not mistaken. And look at this. Look at this pattern, right? The way silver is consolidating. I mean, if you look at, we had an impulsive move down from the teens up to the highs. We came back. We're now consolidating sideways. So theoretically, you know, this is the launch pad for the next move. Obviously, we could correct a little bit, but you know, I think as soon as we break this, I mean, look at this. It looks like a bullish flag, right? It's very nicely, you know, very nicely formed. It's not taking too long.
Keep telling yourself that. Keep telling yourself that.
Yeah. Well, you could have that.
I would actually. I was just looking at a weekly chart, then just trying to draw this out a little bit.
I'm boring. I say the same things because my conviction has not changed. It just makes so much sense to me. So yes, you could play it on the short side for a short-term move. Yes, of course. But come on, you want to get in front of this as a swing trade or a medium term play. I think it's going to be a very bad decision.
Yeah, and I think as from a weekly point of view, I mean, if you're really bullish precious metals, I mean, like your worst case scenario is below 22, or 2150 or whatever this is.
Yeah.
We get below that, and then you just don't want to be long anymore.
And I'm
Yes.
gonna make the biggest scene in trading, right? I'm gonna commit the biggest scene in trading by saying, and that's not something I would easily say since I'm very conservative. My best, the main reason why I'm so comfortable with these positions is that especially with inflation doing what it's doing, and we know that inflation is not going away, right? I mean, even if they tame inflation, etc., it's not that we're going to go to deflation, right? Just a reminder, we haven't had deflation since anybody that's alive can remember, more or less, right? So I mean, even if for some reason technically everything goes wrong, right, and you see, for example, silver go to like $15, I think the chances of that happening are almost zero, right? But let's say it happens, I would still feel just fine holding on to physical silver, because I would be 100% certain that at a later point in my life, I will be able to sell it at a good profit. Yeah, that might not end up proving like the best investment having to do with the timing, obviously, but in my mind, it would be an impossible situation for me to lose money on such an investment if the time horizon you have in mind is not short term necessarily, right?
Yeah, but you're going to have a 12-year-old kid investing in Dogecoin making 12
Yes,
times what you
absolutely,
made.
absolutely.
Well, speaking of cryptos, I mean, Bitcoin's actually down a little bit here. It just really isn't. It isn't moving. We've actually, after BlackRock made its comments the other day, we had Bitcoin rally from this 39,000 to 41.5. We actually hit new trend lows. I own Bitcoin. I shifted one of my crypto accounts to from US dollars back over to Bitcoin, right after BlackRock made that that announcement. So, but surprisingly, it's down below that level, and I'm actually surprised it's under such pressure right now. But I wonder why cryptocurrencies are underperforming. Is there any news over the weekend that I might have missed?
No, they're just following equities. That's it, right? Risk assets. End of story.
Okay. Well,
the riskiest of risk assets.
Oh yeah, it is. So let's wrap it up with Dale. I know your interview.
I got canceled.
It happens on Easter Mondays.
The sentiment in S&Ps, Blake, lowest since 1993 or 92 on the AAII. So very extreme bearishness in the S&Ps. The lowest since 92. That's a long time ago.
That is really, really, really bearish. And look, I look at S&Ps right now, or just equity markets in general. I do think we're range bound. I think you sell, any move up to 4,600 and you buy any dip towards 4,000. And I think you kind of got to trade that as a range for now. And you got to take cues like, what you're talking about with the sentiment, and that'll help you navigate while you're inside of these ranges. Let me point out something that a lot of people are referencing right now, and I want to make sure that I'm very clear here. This is a lot of people are looking at this, and let me grab a drawing tool really fast. Okay, let me move this. Okay, here we go. So a lot of people are drawing this that we are in an inverted head and shoulder pattern, and we're about ready to take off to all-time highs. And I see what everybody's looking at. Obviously we're about ready to carve out that shoulder. Let me be real clear here, though. I hate these patterns. I'm not, and they've worked. This is the problem, is they've actually worked the last 10 years, and it's created a lot of bad habits. If you guys didn't know this, head and shoulder patterns are actually topping and bottoming patterns. They're actually reversal patterns. The reason why they've worked like this in the last decade is because there's been this, massive amounts of liquidity pumped into the markets for the last 12 years. And so, you could always really make an argument for a continued rally in the market. So people have gotten very complacent in their technical analysis prowess over the years, thinking that, oh, look, we have this inverted head and shoulder pattern. We're going to get this automatic continuation pattern higher. I first of all, I don't believe in it. Second of all, I believe the days of
continuation form them as continuation.
Yeah, or let's just say the days of central bank liquidity, like continuous liquidity that we've seen for the last 10 plus years, is a thing of the past. So therefore, things like this are not going to work moving forward. And this is where, if you hadn't studied the books that have been, written for decades and decades and decades, since way before you and I were even born, then, this is where it starts catching a lot of the market off guard. So do I think that we have some support around the 618 retracement somewhere around here? Sure. And, can we, because what Dale's saying, could that be a catalyst that drives us back up towards 4,600? Sure. But I would not want to be chasing the market higher. I think we were probably going to be in a long-term, very big range between the 4,000. And like I said, I doubt we pierce those highs. I think we're just going to be maybe brushing up against them, if anything. So just be really careful with the people that keep telling you that, oh yeah, this is an inverted head and shoulder pattern. Did you know an inverted head and shoulder pattern is actually a reversal pattern after a prolonged downtrend? That's what actually triggers the inverted head and shoulder patterns down here after a prolonged downtrend. And head and shoulder patterns are reversal patterns after a prolonged uptrend. That's why we have a shoulder, head, shoulder developing, okay, which I believe is actually more of a significant development on the upside. Anyway, just wanted to talk about that, because I think there's a lot of people out there that are referencing that, and you have to be really careful in today's environment.
There's some famous author that also validates that argument. Edwards and McGee agrees with you, Blake, but Schottenheim or something like that, because people brought it up when I've said that there's this one guy that talks about head and shoulders can also be continuation formations, but that's not the school.
Yeah, that's not a Thomas and McGee, right?
Edwards and McGee. Yeah,
Edwards and McGee. Excuse me, and I've got the book right on my bookshelf back here.
That was my first book about trading.
I've got an early, I think 9th edition copy.
Yeah,
from I think I got.
Were there trading books when you started trading, Dale?
Yeah, they were.
No,
I thought
they were carved on rocks.
No, they carved them into stones.
Yeah,
yeah, they were on
like in the caves and stuff.
In caves, yeah.
Hieroglyphics and things like that.
I know.
I know where you were going, buddy.
Smoke signal them all to each other. Anyway, well, hey guys, I want to see. I want to say that I hope you guys have a great Monday. And I hope you guys all have a great holiday for those of you that are celebrating. I know if you're in Europe, thanks for joining us today. Dale, Steve, Stelius, do you have anything else left for everybody? I want to reserve the rest of our analysis for the ForexAnalytix, traders that'll be joining us, in about 45 minutes for the morning edge. We go through the morning edge and we fill out this whole bias chart and go through top-down analysis with all these instruments, which we'll do that here in a little bit. Oh, I need to mention, if you guys haven't checked out the trader funding program, do so. We had 3 traders on Thursday qualify for live accounts, 2 traders
in
on
the same
Wednesday.
day. Yeah, it's amazing.
Yeah, it's really, really awesome. And what that means, guys, is that, people are qualifying for live accounts. Like, let's say, you put up $2,500, to try to qualify for a $250,000 account. 5 of those people at the very end of last week actually qualified. Now, I'm not saying that they qualified for those accounts. But they're doing it in their qualifying.
The fact that they're qualifying and
yeah,
is a statement in itself.
I'm a true believer, and that's why I wanted to go down this route. I mean, we all did. As far as Stelio, Steve, and I, we wanted to go down this route with the trader funding program, is because we know that when you're in a community like the ForexAnalytix community, and you have trade ideas, I just so you guys know here, I'll just show you this. This is the trades room, and this is what I said. 4:43 a.m. sold a little dollar Mexican peso while below the 20.02 level, because that's a 618 retracement. And the dollar mex is hitting lows right now. So that was at 1990. I'm short at 1996, and it's trading at 1989 right now. So, having ideas like that, when, like literally, like what I mean, let's say you're short, the last 30 minutes on a Monday like today, I mean, like, that's why people have ideas. It's not like if you get take an assessment with whoever else. I mean, do you have a community of traders that you get to leverage? More than likely not, and not like the community that we have. So, I think that's where it all.
So, I mean, a lot of this qualification speaks towards the quality of the chat room and the ideas.
The chat room, the trades room, the macroeconomics room, the flowonomics, we call it. Just having like ideas so you're not left alone, because that's where traders fail, right? You're on your own, and you start, you have this idea like, ooh, I'm gonna short some euro here. I'm gonna short dollar yen, and then you're like, hey, I was thinking about shorting dollar yen, and you don't have anybody to talk to about it. So you just start shorting dollar yen, and next thing you know, dollar yen's trading at 127, and you're upside down, and you're like, oh shoot, I shouldn't have done that.
I think we need to bring a few of the candidates that made it through the assessment on F.A.C.E, and just have them talk about their experience, and maybe even bring someone on who didn't make it.
You're right. Mike asks, hey guys, in the funding program, is the weekend open positions rule subject to change in the future? Hell no. Why? Why would we expose ourselves over the weekend in an environment like you have right now? Are you kidding me? No, close it out. Open your positions on Monday. Yeah, I mean, no. Like, who's taking on the risk?
Yeah, the broker.
We are. Not you. We are. So no. Think about that. Like, I don't want weekend risk. So just so you guys know, in 2000, my Series 36, who was our reconciliation trader in the brokerage firm that I was a partial owner from. Okay, and we used to clear our trades through Penson Securities, which they aren't around anymore. But that's Penson was one of the big clearinghouses in Texas, and we were in Dallas. September 11th, 2001. I had a trader that was long a lot of stuff, and you guys can just figure out what happened after that. And after taking a hit like that, no, we're not taking on extra risk. No, thank you. So, over the weekend, a lot of things can happen over the weekend. Close out your positions on Friday, reopen them on Sunday.
Yeah, get a date. Forget about the market.
Yeah. All right. So anyway, that's one of that almost drove me into personal bankruptcy. That after September 11th, and so it's one of those situations where I actually had to write a check to Penson Securities out of my personal bank account, not just myself, but all the other partners for our firm. So yeah, I don't want to be ever stuck in that. So anyway, all right.
That probably wasn't pleasant.
No, it wasn't. It wasn't. No. No, I don't want to be on the hook. So, when there's no liquidity and no one's trading, why would you want to get stuck like that? So one of the things about the trader funding program is it actually fosters good trading behavior, right? That's why,
Very true.
the risk tolerances are the way they are. So you're not taking excess risk. It's all about, longevity in this business. That's, and we'll groom traders that, have those capabilities, that aren't going to be the risk takers so much. All right. So anyway, you guys should check it out. It's fun stuff. And people are qualifying. Anyway, I'm going to let it go there. Dale, thanks for being here today. I hope you had a wonderful Easter holiday. Steve Stelios, thanks for being here today on
Thank you, Blake.
Yeah, because I know the guys in the UK are really enjoying their Easter holiday right now. So
Brits are a little bit lazy. I'm kidding.
Lazy. They're all lazy. All right, guys. Well, hey, yeah, have a great one. We'll see you tomorrow morning. And for those of you then are in the ForexAnalytix community, we'll see you in like 35 minutes.
Okay, crew. Best crew. And I'm glad to be a roadie. And I'll see all you guys tomorrow. Remember, Easter came. Hope you were blessed, and don't just count your pips, count your blessings, and let's get them this week. And that is absolutely fantastic news how many people are getting through the assessment. And that's great.
I'm not exactly sure, Dale, but we've definitely have comfortably more than 10 in just 2 months, right?
Yeah, that's excellent. So consider it, guys. And we'll see everyone tomorrow. And like Blake said, I don't know, about 34 minutes morning edge. And you could also sign up. And if you're new, take the trial and check out what they do every morning on the morning edge. It'll give you an edge. Take it easy, everyone. See you, Steve.
Bye-bye, mate.